All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Friday, and very interesting open to the market here this morning. Volumes, fairly light. Just not a ton going on out there. As I mentioned yesterday, we don't have a lot of expected news coming into today. We really didn't get a whole lot of news coming into today. We have this kind of little relief rally into the close yesterday, and then rally overnight, and S&P futures just kind of hanging out up here around 28, between 28.30 and 28.40, and really not gaining a big directional bias here with them. And we have seen a heck of a lot of chop, out there in the market in a lot of individual stocks. Now, we are seeing small caps, which had been lagging. They're leading here this morning. They're definitely leading. And in fact, when we look at most things out there, yes, the market's up, the S&P's up 12 points, right? But there's not a lot of teeth. There's not a lot of teeth in some of these rallies that we see out there. It's not like Ford is making a monster rally, or we see Bank of America making this game-changing type of rally. We just don't see that. And a lot of rallies, early rallies or early opens higher, have now turned negative here this morning, from IBM to FedEx to Chipotle. A lot of stocks have kind of gone that way here this morning. The Halliburtons of the world, Under Armour looks like it's about to go red. So not exactly a ringing bullish endorsement of a market open here this morning. And, I mentioned in my note this morning that, a gap up above the prior day's open price with some of the price action that we've seen, that typically is a bullish signal for that day. But that's about all. That's about all. Doesn't really mean anything going forward. Now, other things could happen on that day that could mean something going forward. But, as far as the morning gap here, that's about all it means. You can see we have about 350 advancers versus 140 decliners in the S&P, or 360 to 140. We have a few stocks up pretty big, but most of those are on some news. We have a few down big, but Foot Locker, that's an earnings report there for it. But most things, just not a lot of real material change in the nature of the stocks and how they are trading here today. Now, for the challenge, we're at 8:30 here, so let's go take a look. New entry triggers here this morning, none. There are no new entry triggers here this morning, and it is something that I'm going to address here on this video because I was asked about it yesterday, and it's something I've spoken to before, so nothing too different is going to come out of me here. But want to kind of speak to this kind of low signal kind of start to the month of May that we have seen here with the trading signals. Now, I have one trade on the board, Johnson & Johnson, and JNJ stock price is 139.20. Now this is one with the dividend here, right? The dividend affects the stock exit level and stock profit level, and I will go in and adjust that here. But the dividend was here. I'll do it while on video. Let me get the exact number on the dividend here. So the dividend here, it doesn't have it right on that chart. I have it off screen here, so let me grab it. Basically, a dividend is a cash payout to investors. And what happens is the stock price lowers by that amount, right? The stock price decreases by that amount. It's not something that affects options because options have already priced that in. It's something everybody knows is coming, and it's just something that for the most part is kind of a non-event from a trading standpoint. Here. So let's see. The data is not coming up. There we go. Ex-dividend 95 cents. So basically the exit level needs to be minus 95, 0.95, and the profit level needs to be minus 0.95 here. So let's see if those equations will set it up right. Yeah, it did. All right, it did. So, anyway, now that is adjusted here for the dividend. The option price, it's kind of funny if you've been watching the option price. It's had some very interesting moves associated here with it, but it's at 238 right now. So let's throw that in here, 238, and so we're looking at a small gain, here on it as it sits. So the stock price has, moved higher. The option price, is finally moving a little bit higher, but it's not hitting any of those levels. So, we're going here to the auto exit date on green, 5/25, which is on Monday. So we'll take a look and assess then, unless something changes. I did adjust the stock entry price by the dividend amount here as well. And in fact, if I do that, then I don't need to adjust it on the profit and loss levels. All right, so it is adjusted and running there. Yeah, we need about a 220, 230 rally from here in JNJ, to be able to hold it a little bit longer and ride that trend that does look to be emerging here with it. But we'll see what the price action does and how it takes J&J going on forward. Now, J&J's had a few interesting candles. Yesterday was an interesting candle. It had a downside reversal candle the prior day. One thing to keep in mind, there is zero candlestick analysis built into the algorithm. The algorithm doesn't care. It does not care what that candle looks like at all to trigger a buy signal, to trigger a sell. It takes zero into account when it comes to candlestick analysis. And that was something that, when I originally was playing with the algorithms and stuff, I was looking at, can I build some candlestick analysis into it? But when I really looked at the data, when I really looked kind of over the long term, the candlesticks, they had less accuracy to them than what I was trying to get in the algorithm. So it was one of those where if I added candlestick analysis to it, I'd actually lose accuracy and increase whipsaw amount and decrease some of the reward amount. And so it was something that I ditched early on because it was very obvious that, it wasn't needed. It wasn't going to help. Doesn't mean candlestick analysis isn't really cool and isn't something you can use. I love candlestick analysis. There are certain candles I really like. But for the most part, for the whole part, when it comes to the challenge, candles are not part of that in any way, shape, or form. Okay. All right, so no changes to the challenge, here this morning. We're kind of just sitting here at about the 38 or 3,700 level here, 3,700 level. So about a 20% gain in the challenge on 3 trades. With one, all of them having to get stopped out for time. None of them hitting their targets, one way or the other. And this has been kind of a common theme out there. We have not seen a lot of new emerging trends, since the challenge has started. And one of the things that I did at the beginning of this challenge is I added stocks to the watch list. And one of the reasons for doing that is because going through this time of year, May, June, July, August, it's one where there are just fewer trend signals historically. Right. And so, I mentioned that originally I was adding to it so that we'd end up getting a few more signals, could get into that kind of 3 to 5 to 6 signals a week, coming into play, knowing some weeks are going to be greater, some weeks are going to be lesser. But the reality is this week, it has been very light. It has been bone dry when it comes to signals. In fact, we had J&J on the 20th on Monday. And that is it, other than Amazon yesterday, and Amazon bouncing a little today as the price target on it was raised to 300. But let's face it, it's not like it's shifting into a bullish mode here, right? And 0.6% move, it's still in that kind of bearish signal, bearish trigger pattern here, and it's something I'd go trade for the challenge if the option prices were not what they are, right? So very, two signals in a week. We may get another here by the close of the day. Perhaps there are a few things that are close. Procter & Gamble's close again. Honeywell, maybe. Facebook, maybe. But chances pretty slim. Raytheon, maybe. They're with it. But either way, if we get one or two signals into the close, we still have a week where there's fewer signals than what I would expect on any given week. Okay, and is that abnormal? Is something wrong or something? No, in fact, it's one of those where this week it's right. Right? I mean, we've had a lot of chop. I mean, yesterday I got an email saying, hey, are we in for the big downside of the market now? Is it time to go big? Well, I didn't get a lot of stocks signaling bearish, even though things like Facebook had sharp moves lower. IBM sharp moves lower. We saw Chipotle with a sharp move lower. We saw a lot of 3-7 crosses, but we didn't get, really good bearish signals associated here with them. And it just kind of goes along with the day prior. We had some sharp moves up, like Twitter, right? Twitter had a 3-7 cross, but didn't trigger bullish. The next day, here a couple days later, we're down pretty big. It's one of those where the algorithm looks at past history. You've heard me say this before, but looks at past history and says, hey, what is the probability of trend right here based on what the stock is doing right now? And there are some seasonal elements associated with it, right? And when you look at a lot of stocks, May, June typically aren't trend months. They can be some heavier chop months. So that does come into play a little bit. But a lot of the 3-7 crossovers we've had to the upside haven't triggered, and a lot of 3-7 crossovers we've had to the downside haven't triggered, right? And here we had Raytheon 3-7 upside trigger earlier this week. Yesterday, 3-7 downside trigger, only to rally, only to pop and drop and rally and drop here. It's still in chop mode, even though we're having those crossover triggers. The other elements are not playing out to say, hey, you know what, the trend is here. Let's go, and that is just played out, across the board with stocks that have fresh 3-7 crossovers on them. Now, there are things like FedEx, which triggered before the challenge started, and we talked about it on the day that it triggered. I showed you the position I set up and everything else. We weren't running the challenge at the time. But you can see, it's had pops and drops and different types of candles and everything else, but it's been a big bad bear trend, right? And that's what the algorithm's looking for, and just hasn't had new signals really come in here this week. I show you what is kind of getting close, but close isn't something that has any bearing. There's a reason why the trigger is set where it is, because if I set the trigger to be a little earlier, the whipsaw risk is significantly greater. And if I set the trigger to be a little bit later, we lower a little bit of whipsaw risk, but we lose a lot of reward potential. So, this isn't a signal that I can go and say, well, I'm going to go and anticipate it one way or the other. And, so waiting for those when they emerge, pouncing and going. And I've talked about when the market is chop, I expect the challenge to grind, and grind slightly higher. And this is about what I expect. The challenge started at $3,000. It's around 3,500, right? This is kind of the grind I expect when we're in this type of environment. And then when a trend moves, then I expect the explosive gains to come in and, for them to happen. And again, please, This is not looking at the market, right? This is not trading the market. This is individual stocks and individual stock movement. And so, yes, the market can be in a bullish mode, and we can get a bear signal on a certain stock and play it. And we can get a market that's in a bearish mode and get a bull signal on a certain stock and play it. Those things are going to happen. Heck, we've seen it happen here, so far since we started the challenge. We started it on the 9th, right? So let me just pull up what the market has done since. But right here, oops, let me get a vertical line here. But right here is the 9th, right? So this morning, the market gapped on down. The next day, market was up. Next day, market gapped down. Then we had 2 days, really kind of one day of, one day kind of break higher. The next day, a little follow through. So a 2-day rally here. And then, 2 days down, 1 day up, 2 days down, now 1 day up. We have no trend here coming into play. And for the most part, most stocks are in that position as well. There's no new trends emerging. Stuff that started its downward trend here before the challenge started, they've continued. The Halliburtons of the world, the FedExes of the world, and you've heard me talk about those. But there are no stocks on the watch list that have pushed into new trends that since the challenge has started. They're either trends that were, or they have been consolidating here with it. Procter & Gamble, the closest to kind of a new trend, and in fact, Procter & Gamble could trigger today, as I mentioned earlier. We did have a little morning strength here on it, but right now it is not a trigger as it sits. Hopefully J&J emerges into a nice trend. That would be nice to see here. And to see that see the kind of 140 141 even into the 142 143 level get achieved here, and be off and rolling. All right. So anyway, that's my take there on it, and kind of what I look at, and given the data that that is over the last 3 years with this, given what the market has done, this is about what I expect. This is not something unusual. This is not something where I'm looking and saying, well, okay, today, what's the stock of the day? What's the trade of the day? What is the, am I going to buy something on the bottom today and sell it on the top today, and the day trader type aspect? No, that's not what this is what this is about. This is about finding and riding, big trends and surviving through periods where trends are not emerging, and that's going to be the way that it rolls, going forward. Okay, so anyway, that's that's my take there. So that's the challenge and where that sits. We saw a couple upgrades this morning. We saw Vale, VALE, upgraded this morning by two firms. We saw PBR upgraded by another firm. And, earlier this week, I talked about the EWZ, the Brazilian ETF, and the move that it had right here. This is typically a very bullish move where in one day it erases, 4, 5, 6 days worth of loss. And, very just bullish implications associated here with it, but not the type of move where you expect, the next day and the day after and the day after that. You expect a little consolidation, and then if you get that next break up, off it goes. So it's in a little bit of consolidation here, but some positive analyst commentary. Now, the analyst commentary on Vale surrounds iron ore pricing. Now, we talked about this big move here in Vale right back here in January. What happened in the mine, and this kind of being a repeat of a tragic event from a few years prior, and all the litigation and everything that was going to have to be dealt with because of this. And we mentioned it's going to take 3, 4, 5 months for it to base out, for it to find its, for it to kind of shake this off and for investors to kind of look and say, okay, this incident is behind them. Now, this incident isn't fully behind them. There are still legal things happening. There's still, for years to come, there are going to be ramifications here. But in terms of investors pricing all that in, that's done. Right? It's all been priced in. Now it's about iron ore. It's about the pricing of iron ore and, how iron ore pricing goes going forward. What's interesting is the upgrade this morning on Vale was due to the analyst expecting an increase in iron ore pricing. Which is interesting because you think about the trade war, you think about, all of that and, some of the economic data, and you go, okay, iron ore, is it going to, are prices going to go up? Is that what we are going to be seeing here, or are we more likely to see iron ore pricing, going down? Well, I'm going to pull over here a chart. This is a spot price for iron ore. And, you can see where iron ore sits. It just continues to rally, continues to go up. It had this nice spike here in January, a little bit of pullback, but iron ore pricing has continued to rally. And that's a 1-year chart. Here's a 10-year chart to give you some perspective. So it's nowhere near 2010, 2012 levels, right? It's just nowhere near it. But it is sitting at, a 5-year high? A 5-year high here in iron ore. Now, cheap pricing in iron ore, okay, by Vale. All right, or prices of iron ore going up by Vale. Well, there's other stocks in this group. BHP Billiton, right? We talked about BHP Billiton right back here. We talked about, the emerging rally. We talked about this sell right here and how, hey, this is not a dip to buy yet. There will be a time, but it's not a dip to buy yet. We've talked about NGLOY, Anglo-American as a little kind of a riskier play, but, same thing. After this sell-off, no, it still needs some basing out. But we now are talking about iron ore prices hitting new short-term 5-year high. We're talking about some positive analyst commentary on Vale. Is it time to go jump back into these? Is there more rally to come? Yeah, they're getting really close. From a technical standpoint, one of my favorites is Rio. Just from a pure technical standpoint, you look at how it has performed in the last month. It has outperformed every other one of those iron ore names. And when we talk about a company that has buyout potential or, the potential to get taken over, which is, something that I think we're going to see in the space here within the next year or two. It could happen at any time. So when I want into iron ore, I want into something that could get bought out, not playing it to get bought out, but I want that potential. Its market cap is about $98 billion, so it's not cheap, right? It's not cheap, but it still has that potential. Not only that, you have a 6% dividend here to run here on Rio, a PE ratio of 7. It is a cheap stock, here no matter how you slice it. And when you add that to where iron ore pricing is, it's a stock that could easily sit around $80 here by the end of the year. So my favorite here at this time from a chart and fundamental standpoint, I think Vale is perhaps the riskiest of them all, but could have some of the best percentage return on it, just looking for a snap to back to 14 or even to 15 as the stock kind of fills some of the gap here from January. So, BHP, kind of middle ground there. I get a little nervous to trade BHP because I think they're going to be the ones to step in and buy Rio or step in and go and acquire another company. And so, if that comes out, no. You can see BHP, their market cap about 30 billion more than, 25 billion more than Rio. The dividend's about 1.5% lower. PE ratio, it's about double the valuation on the PE ratio. But this is kind of the blue chip in the area, where the NGLOIs, the Vales, a little more risky, and then the Rio that kind of middle ground here for it. So, if you're looking at that analyst, you're looking at that commentary, you're looking at the prices of iron ore, and Rio is not on the challenge watch list, so I won't be playing it for the challenge. But this is a stock where you can even buy it right now in the short run and say, all right, I'm going to use yesterday's close price as my stop point and just kind of put a real tight stop. It'll increase the whipsaw risk, but if the timing is right, the reward potential is very high, from right here. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.